Hello YouTube, welcome to another video. Today we are doing incomplete records. We are going to be focusing on our question 4.2. This is the 20 June 2016 question paper. We will be focusing on the 4.2 question, which is our debtors control and our creditors control. The following information from the financial records of BP stores who did not keep full records of transactions were available at the end of the financial period. So on the 28th February 2015, meaning that our year begins at 1st of March 2014. So we are going to start with our debtors control. As always, we are going to be using our Excel spreadsheet as our answer sheet. So we are going to start with our balance, which is the K, balance brought down. Our balance brought down is It's balance brought down. Yes, it is. Our balance brought down is as follows. It's 50,625, because as you can see here, it's our debtors. This is for the debtors control. According to the dates, this is the balance at the beginning of the year. So this is going to be our opening balance, and then this is going to be our closing balance. 50,625. 50,625. This is our, let me just do this to go under currency as well as this column, currency. So moving forward, and then let me just put our balance carried down here. Balance carried down without forgetting it. Our balance carried down. Balance carried down is our balance at the end of the year, which is 57,250. 57,250. 57,250. 57,250. So we are going to look at this information and this information. Payments to creditors and cash purchases. So we know that when we are doing our debtors control, we only focus on information regarding the debtors only. Yes, which is regarding the debtors. We are looking at the information affecting the debtors only. So payments to creditors, this is for the creditors control, and then payments by debtors and cash sales, it's 322,875. So by the look of things, we can't differentiate between the debtors and cash sales. We don't know how much is the amount for cash sales, how much is the amount for the payment by debtors. So we are going to record it as it is under our debtors control. So we are going to 322,875. This is going to be recorded on our credit side. Why? Because now our debtors control is decreasing as our debtors are paying us our money. Our debtors control is going to decrease. So it is going to affect two accounts, which is our bank account and our debtors control. When our debtors control decreases, our bank account increases, because now we as a business, we are receiving the money. So our control account is going to be our bank account. So on our amount column, we are going to record 322,875. 322,875. Returns by debtors. So these returns by debtors, we are going to take it as it is, which is 26,750. Returns by debtors, they are also going to be recorded on the credit side. These are the returns. So meaning that when the debtors return any of the products that we have sold to them or anything, it's going to decrease our debtors control, because now previously we would have sold them on credit. Now that they are returning the whatever they are returning, we should decrease our debtors control, because now we no longer have them as our debtors, as they have returned whatever they have returned. It's 26,750. It's going to be 26,750. 26,750. Returns to creditors, this is for creditors control. And then discount allowed to debtors, it's 1,750. Again, this is recorded on our credit side of the debtors control account. So discount allowed to debtors, it's 1,750. Discount allowed, it's, how much is it? 1,750. There we go. And then on this information, I think we are done with everything for the debtors. And then on our additional information, a debtor who owed 5,200 was declared insolvent. His estate paid 35% of his debt, and this has been added to payments by debtors. The remaining balance must be written off as bad debt. This must be written off as bad debt. So we are going to take the balance, which is the 65%, which is the remaining balance that should be written off. So his estate paid 35% of his debt, and then this has been added to the payments by debtors. What they mean about this is that 35% of this amount of 5,200 has already been added to this amount, which is 322,870. So the remaining balance must be written off as a bad debt. So we are going to take 65% of 5,200 and then write it off under our debtors control. We are going to say bad debts. We now know bad debts are credit losses. It is no longer, it's credit losses. Our bad debts are no longer called bad debts, it's credit losses. So as well as discount allowed. Discount allowed, now it's settlement, discount granted, settlement discount granted. So our credit losses, we are going to say 5,200 times the 65% that should be written off, 65%, which is then giving us 3,380. So by the look of things, we are done with our debtors control, which is for 8 marks. We are going to close off everything. We are going to close it off. So we are going to say equal to this. We are going to sum. By the look of things, this is the greater side. We are going to sum we are going to sum the credit side, add everything together. We are going to add the credit side together. Sum of this, which is then equal to 412 and 5 rands. So we are going to say this side is equals to this side. So 412,000 rand and 5 rands. 412,000 rand, 412,000 and 5 rands minus 50,625, it's equals to 361,380. So now this, the contra account here is going to be sales. Our contra account is going to be sales, meaning that this is the amount for sales that was sold on credit to our debtors. Yes, this is what we were required to do for debtors control, and then I think we are done for debtors control. Our video will end here, and then we are going to do our creditors control on the next video. So please don't forget to subscribe, like, share and comment. Please subscribe. Please subscribe to the channel for more videos. Thank you.